Let's take a look at how the markets have reacted to these Q2 figures. The rand remained weak as second quarter gross domestic product data was released earlier on today. The SA gross domestic product decreased by 51% in the second quarter. The largest contributors to the fall in GDP were basic iron, metal products and machinery, food, beverages, petrol, and mainly driven by falling exports as well as household spending. All of these are factors that we discussed throughout the course of this afternoon. Now, in early trade, the rand was up by 0.31% at 16 rand 70 to the dollar. And now the rand sits at around 16 rand 87 to the dollar. For a look at how the markets have reacted to the GDP figures and the latest company news, we're joined now by Anthea Gardner, and Anthea is the managing partner at Cartesian Capital. Lovely chatting to you once again, Anthea. Let's take a look at the rand and its performance. It's been quite jittery throughout the course of the morning. How has it reacted to the latest GDP figures?
Good afternoon, Tommy. So the rand definitely weaker, especially after the GDP number. But to be fair, it's almost hard to believe that the rand is almost 16% stronger than where we started the year. And you know, it was a time when we were plagued by so many things: the COVID crisis, increase in government debt levels, downgrade by Moody's. There were so many things against the rand. So for it to be so strong this year is quite a surprise. And I think it points really, and the bond market will speak to this as well, that the search for yield is definitely started up again. So global investors looking to go to markets where they can find yield. And obviously, the South African government bonds, you know, still trading at kind of the above 9%, 10-year at above 9% level, is clearly bringing those investors to our shores.
Now, the expenditure on GDP, it tumbled by 52.3% in the second quarter, and this is according to Stats SA. Now, was this something that was anticipated?
Sure, so hard to say. It's difficult to guess this number, right? And there were so many people putting it out there. These are not normal times. So, of course, we were going to see a huge shrink in consumer spending on the side in kind of our economy, and just the GDP falling so dramatically. So, yeah, whether it was expected or not, it was definitely expected to be this massive.
Now, this was, though, mainly driven by falling exports as well as household spending. When compared to other emerging markets, how do we fare?
Tommy, I don't think we're any worse off than other emerging or other global markets, not just emerging markets. I know we saw this morning Japanese economy printing kind of a 28% contraction in their second quarter numbers, so pretty heavy going. And then Fitch's downgrade India's expected economic growth, or contraction as it may be in this case. I think everywhere the world is suffering, and what we're probably going to look forward to, or should be looking forward to, is how this all plays out from now on. And I'm afraid I don't see the pent-up demand that other people are seeing in the economy. And in fact, today's Japanese numbers showed it, because even in July, they'd already come out of lockdown, and you saw household spending and wages still falling, even in Japan. I think people are just anxious and nervous about coming out of lockdown and then spending. You know, as I mentioned, this economy wasn't strong to start off with. And now we've seen an increase in companies going into business rescue. We've seen unemployment increasing. So, yeah, I think things are still going to be difficult going forward. What will look interesting is these numbers, though, because what you'll see in the next quarter is probably a jump in economic growth, but that's because it comes off a low base.
Anthea, I want to ask you about this recovery that we are expecting. There's been a lot of talk that we are going to see a V-shaped recovery as opposed to a U-shaped recovery in economic growth. But this suggests that the fourth consecutive decline suggests that this is definitely, a U-shaped, recovery for South Africa at least.
So, Kolani, I think if you look at the JSE, if you look at the equity market, you will see this V that everyone's talking about, which to me is completely bizarre. For example, the top 40 index is now above kind of pre-COVID trading levels. But from an economic point of view, I can't imagine that there is any recovery coming within the next 5 to 10 years in South Africa. I think it's going to be a very long, hard road to get back to where we need to be. I will congratulate government for talking about, wanting to focus on economic recovery, but I'm not sure what exactly are the points that they're going to take forward. It's one thing to talk about it, but to actually implement economic recovery is going to be very hard. So I can't see any V-shaped recovery.
Before we let you go, Anthea, before we let you go, let's just focus a little bit on ShopRite. I mean, they've released their results for the year ended the 28th of June, 2020. Take us through those numbers as well as their plans to end their Kenya expansion plans and retreat from the country. If you could just take us through those developments in 30 seconds.
Sure. So ShopRite, nice healthy set of results. I mean, we saw a glimmer of hope from the food retailers last week when we saw Livestar's results. Pretty much the same, the division that catered to home cooking and baking did much better than the other areas. So of course ShopRite doing much better locally, increasing its market share, fantastic there. So group retail sales growth of just almost 6.5%. So very So steady and comfortable growth there, and the market certainly is congratulating it because the share was up last time I checked over 9%. I think what ShopRite is looking for in Africa is they're understanding that perhaps they are a little bit more risk averse than they thought. So they're wanting to get out of regions where they see the consumer or trading risk higher than in other areas. And again, I think the market liking that, that they're moving out of areas that they don't want to be in or more risky areas and moving into probably safer, in inverted commas, areas, if you like.
Well, thank you so much, Anthea. We'll have to leave it at that for this afternoon. Thank you. Great chatting to you once again.